Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. Market-wise, let's take a look at it out here. We had the Dow Industrials closed down 195, NASDAQ off 43, S&P's off 36, gold contract down $6.70, traded at $1,285 an ounce. Silver off 7 cents at $18.01. Platinum down $8 at $1,255 an ounce. Copper $2.46 a pound. Light sweet crude, big problems with light sweet crude. It just refuses. There are no buyers. In fact, when they come out with the supply today, folks, it's the largest fuel supply we've had in 8 years. Big numbers. What did it do? Down $1.96, trading at $44.28. That baby's going to $32. It's going to be crazy. But bottom line, that's where it looks like it wants to go. Bond market to the moon. We know we get the TLT. It's an ABC structure on the way up. Confirmed ABC on the monthly. Took it out. Wide price spread, accelerated volume. 10-year up 26 ticks at 130.15. 30-year up 1.19 ticks. That's a monster move. Trading out at 151.04. King dollar up by 590 ticks at 94.83. The euro down 92, trading at 112, and the yen off 45 at 117. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have, folks? It's a nasty close out here. No two ways about it. So this is what you have. We take a look at these futures. The futures right now, folks, are at 1992. Your swing point from January 16th is low is 1970. Your swing point from December 16th is 1961. What you're going to see is this. Bottom line is that this S&P is going to wake up in the morning, and this is called, you're approaching ice, folks, okay? And this is really dangerous in the context of how you're coming into a swing point. This is what it is. We had a monster expansion with volume. As this Fed meeting day come out, I suspect we did 855 million shares on the NYSE versus 711 of yesterday. On the NASDAQ, we blew by 2 billion, okay? So the doors aren't big enough on the way out. What happens with ICE is this. Market goes to sleep tonight. Asia's going to wake up. I suspect trade lower. Europe's going to basically accelerate. The market itself, the S&Ps are going to go after the swing point. When you go after a swing point in the morning, your probability of taking it out goes up dramatically, particularly when we're so close to it. Late in the afternoon, it's a lot harder. You know, late in the afternoon, our markets absolutely, though, did get some heavy power. You know, the Fed come out. Fed said, hey, listen, man, everything's going to stay the same. Inside that Fed statement, folks, the biggest thing that I saw inside that Fed statement was the quote about they're going to keep their eye on international parameters. Well, guess what? It's very simple and it's common sense. We know internationally, we know Europe is history, okay? It's a huge problem. So what does that mean? That means, guess what? The Fed's not going to be going up on rates. Our rates are the highest in the world right now. Our 10-year is still at 1.7. Okay, do you want to lend money to the United States at 1.7, or do you want to go to France and lend money to France at 0.56? Oh, really? Or maybe go to Germany and lend money to them at 0.35? It's not going to happen, folks. Not going to happen. What does that do? Now, this is the freak out. What it did is they sold it off. Now, if I was a bull, I'd say, hey, that's great. We still got free money. So I can understand that correlation that bulls are going to be saying tonight, what the heck just happened? Because when we go from highs to lows out here today, it's pretty intense. You know, the Dow high was 484, and we're at 191. Bottom line, You're at 17,191, but guess what? The Dow wants to get out of 15,885. So when we're looking at this S&P, your first stop and second stop is December 16th. The larger price point out here, though, is 1805, folks. And bottom line, we'll see how we make our way down to it. But many of the equities are already down to it. The XLE has already broken it. The XLE is doing an additional ABC structure on the way down. If we go over and just look at that XLE for a second, what you're going to see, you're going to see an expansion of volume out here, all of the above. And guess what? If you get the largest oil stocks in the world going south, and going south with volume, if you don't think the S&P is going to follow it, just wait. That's the S&P. Okay. Now let's go over and look at the NDX 100, and we'll look at that through the 3 Qs, because what happened inside the NDX 100 today, okay, was quite a feat also. What you had is that, of course, we had good old Apple. Apple come out with numbers, great numbers, huge numbers on Apple. Okay, but you know what? Apple could only close up $6. Apple's got a problem. And I'm going to show you something. Remember I was talking about yesterday that if you have an acceleration of volume and you can't take out a swing point, there's a problem. That's what happened with Apple. Apple did 144 million shares, folks. The high on Apple is 119.27. You got to 117.62, 118.12 rather, and that's it. It couldn't handle it. It can't handle whoever the seller is from December 1st. They were just giving it to them all day long, okay? Because we opened at that 118.12 and you closed at 115.13. Not a good scene. But inside that context of Apple going up, the composite itself had a 100-point price spread. And what that's all about, by the way, folks, is the IBB. This is something that's underlying, but it's a very large weighting structure inside the NDX 100. The IBB was down $7. That's not a lot, but because the NASDAQ is a modified weighting structure, and inside that modified weighting structure, these biotechs have a big structure in them. So that was very stealth coming in, and that's what that was about. Now, after the close out here, the NDX 100 is going to have a huge problem. Why? Because Qualcomm, which is a large weighting inside the NDX 100, that just come out, and they just come out with the warning. So let me read you what they're saying out here. So Qualcomm, let's see what Qualcomm is saying. Qualcomm has just gone from 71, and she's trading at 67 right now. So this is going to be a slight problem for the NDX 100. And she's, oh my God, you got to see these. This is just crazy. And what I'm talking about specifically, these high volume lows, they're going right after them. Qualcomm has a high volume low at $67.67. It's trading at 70. It's trading. Hold on. I mean, it might be trading right there right now. Yeah, it is. It's trading there right now. It's trading at 67.24. So Qualcomm, what does Qualcomm have to say? Let's say they're they cut. That's what they're doing. They're cutting their 2015 earnings per share estimates. Okay, this is what Qualcomm had seen. The estimate was $6.9 billion. Now they see $6.6 billion. Big problem. Their estimate was for the bottom line, they saw $1.25. Now they're seeing $1.18. So big problems. We go back to the roundup for today. Gold. Let's go over to gold. What they try to do with gold, which they always try to do, particularly when the Fed day is out there and on Fridays. Try to whack it down. Couldn't handle it, folks. Gold is at 1284. It's building a monster ABC structure on the top side. It's going to be interesting watching this whole baby shake out. Bond. The bond market, just absolutely amazing. Bonds just refuse to back down, folks. I mean, back down in an extraordinary way. We take a look at the 10-year first. What you have with the 10-year is this. We're at 130.15. And this 10-year is ready to launch once again. You stay right there. We're going to be coming right back. Dow Industrials finished down 195. NASDAQ off 43. S&P's off 38. We're going to be right back.